Hello, this is Arthur Hill with StockCharts.com. It is Tuesday, November 12th, and you're tuned into Don't Ignore This Chart. Today, we're going to look at the Nikkei as it breaks resistance and the yen weakens. So here's a chart for the Nikkei 225, and it's an end-of-day chart, which means today's move will be updated after the close of trading in the U.S. So this is Monday's price level that you see for the price bars, but if you look at your other sources, you will see that the Nikkei closed at 14,589 on Tuesday. So that means it has broken above that little wedge trend line. And so that keeps this uptrend that's been in place. Well, actually, you can say there's a long-term uptrend because first you had the big move, and then you had this triangle consolidation, and you broke triangle resistance. Now we're having a little trouble continuing higher, but we're still forming higher lows. So we definitely have an uptrend in place since June, and now this wedge breakout looks to be bullish. And I would mark support there at 13,900. Now the red dotted line shows the yen index, and there's a clear inverse correlation. In other words, these two move in opposite directions. The yen moves down, and the Nikkei moves up. So you can see on this chart, the yen is basically flat, but it started turning down and it's just broken below that triangle trend line. So if the yen is going to move lower, we would expect the Nikkei to move higher because of this inverse correlation. And that inverse correlation is quantified with the indicator window, and you can see that that correlation has been in negative territory for most of the past 12 months. Yes, we had a couple blips into positive territory, and we have one now, but I wouldn't expect that one to last. All right, that concludes this edition of Don't Ignore This Chart. Thanks very much for tuning in, and have a great day.